Hello and welcome back to another trading concepts video. I'm so sorry for the delay in the video as I was under the weather for a very long time. But today we are going to talk about fair value gaps and how we can implement it in our existing trading setup. So let's just jump right into it. So what is liquidity? Liquidity is basically the open interest of buyers and sellers in the market and can be further defined by entities around specific price levels. A highly liquid asset has many buyers and sellers, meaning trades can be executed quickly at stable prices. As we discussed in our previous external and internal range liquidity concepts video, there are two main types we segregate liquidity into. First being the external range liquidity, which is basically liquidity pools at range highs and lows, and the second being internal range liquidity, which are the fair value gaps and imbalances. We boil down this concept to basically internal range liquidity as fuel propelling prices towards the external range liquidity. So, what really is a fair value gap? Basically, fair value gap is a three candle pattern structure. As you can see, we have one, two, and three candles, leaving a gap in between here, and this gap represents an imbalance, or we can call it an inefficiency in the market delivery where the price displaces quickly to the upside. It is more or less a range in price delivery. One side of the market liquidity is offered and typically confirmed with the liquidity void on the lower time frame charts in the same range of price. The market may later return to these gaps to fill or rebalance them before continuing the trend. So here we can elaborate more into the types of fair value gaps that we will be using. So firstly, we have a bullish fair value gap which forms when price moves up aggressively, leaving a gap between first candle's high and the third candle's low. It indicates strong buying pressure and price may retrace to fill the gap before continuing higher. Basically, the fair value gap here can act as a support zone for the price when it retraces. So vice versa, we have a bearish fair value gap which forms when price moves aggressively down, leaving a gap between the first candle's low and the third candle's high. As we can see here, we have a bearish fair value gap. It indicates strong selling pressure and the price may later retrace to fill the gap before continuing lower. The gap left can be seen as a resistance zone when price retraces back, as we can see in this example. Some more alpha on the types of fair value gaps that we see or use. Keep in mind we're only talking about bullish fair value gaps here, and similar but vice versa goes for bearish fair value gaps. Starting off with the consolidation fair value gap. So we can see one, two, and three candles here. The difference between all these fair value gaps is basically the third candle. So basically the third candle is a consolidating candle in the consolidation fair value gap, which shows an indecisive or neutrally closed candle. If we go down on the lower time frames, we can see that third candle is more or less a consolidation after expansion is seen in the second candle. It is neutral, but it is ideal for trend continuation from this fair value gap acting as a support zone. The second one is an expansion fair value gap, where the third candle is also a good strong bullish expansion. The third candle is proper expansion while creating a fair value gap, which indicates a good strong continuation of trend, but here's a possibility that price might not retrace to this fair value gap. And if it does, there's a huge possibility that price might not retrace immediately in the following two or three candles. It might take some consolidation here before price finally retraces to the fair value gap. The third one is a rejection fair value gap, where the third candle is a bearish candle which suggests that the price might oppose the order flow and weakens the bullish trend. This shows lack of conviction in the fair value gap that is formed, where we are expecting the fair value gap to act as a support for the price and the fair value gap becomes low probability. Here is an example of basically how we can see all the types of fair value gaps that we were explaining forming together in a single fractal. As we can see, we have a bearish fair value gap here aligning with the market structure after giving us a shift in order flow. As you can see, the third candle of this fair value gap is a consolidating candle. The candle saw a big rejection, but still the candle has closed bearish. A few consolidating candles here before price taps into the 50% of this fair value gaps, finding support here, finding resistance here, sorry, and then the price continues to break down lower. Here we see a sweep of these lows. You can call it a double sweep as well, and a shift in structure here. And I missed out on marking this shift in structure as well, but we see two shifts in structure, and we have left open a fair value gap by the displacement we saw while giving us a market structure shift and a change in order flow. This fair value gap overlaps with bullish order blocks as well here and here, which makes it even more high probability. This is an example of an expansion fair value gap. We see some rejection as well, but we count it out as an expansion candle because we need to see the body smaller than the wick here, and the price has retraced back into the fair value gap, taking support from the 50% zone and bouncing back up from here, as we can see in this particular price action. This is a breakaway gap where an FVG is formed, but due to the price action and the trend being so strong in one direction, the FVG is not tapped into. Finally, we can see a rejection fair value gap here, which shows the weakness in the trend as well as possibility of a reversal. Some more alpha related to this rejection fair value gap is that we will always see it forming around an area where we have an opposing array. As we can see, we swept the high here and the price started to break down, eventually disrespecting this fair value gap and continuing to push down lower. Further, we have another example of how an expansion fair value gap can act. As we can see, price rapidly goes to the downside, leaving behind a bearish fair value gap after a long consolidation period, which confirms what we discussed earlier, that an expansion fair value gap price may or may not return immediately to find support from the fair value gap. We see a long consolidation here before the fair value gap is finally tapped into and price continues to break down lower. There is another example on the Euro chart. Price has given us a continuation in order flow here and structure, leaving behind a bullish fair value gap inside a bullish order block. As we can see here, this is a consolidating fair value gap and price has beautifully tapped back into the fair value gap to find support and pushes on from it. In the same price action fractal, we can see that in this area price has given us a bearish shift in order flow after sweeping the highs of the range and has moved toward the internal range liquidity marked out here. Right before tapping into the internal range liquidity, we have a consolidating bearish fair value gap left behind. Price beautifully taps back into it, finding resistance right at the 50% region of the fair value gap, continuing to take out the internal range liquidity here. We have an example of multi-time frame analysis here On the NAS CFD chart, as we can see, we are clearly in a trend and price has been pushing forward. And as you can see here in this fractal, price has given us a shift in market structure here. And you can see here in this fractal, we have left behind a fair value gap overlapping with the bullish order block as well. Right before moving towards the external range liquidity, price taps back into the fair value gap left open, finding support at the 50% region, which propels the price towards the range highs. And here we are on the 4-hour chart of the NAS 100 CFD inside the same weekly fractal as shown previously. We are clearly in the final quarter of the range, and again, price has continued in the direction of the market structure and order flow, leaving behind a 4-hour fair value gap overlapping with the bullish order block here. And price steps into the 4-hour fair value gap, finding the support and propelling towards the range highs marked out. On the execution part of the 4-hour in the same NAS CFD chart, we can see price gives us a shift in order flow here on the 5-minute chart before retracing back into the 5-minute order block formed here. And we took our entry, putting stops right below the body of the low, targeting for an easy 2 hour towards the highs. That's how simple it is to combine fair value gaps, to understand the order flow, market structure, and liquidity in all three time frames to support our idea and align them with all the existing time frames to increase the probability of our trades. That's all for this video. I hope you gained some insight and like the content. I'll again say this boring quote to end the video. Let time do the heavy lifting and just keep going at it. That's all for today. You'll find a lot of insight along with daily streams and outlooks in my Discord, so make sure to join that. And don't miss out on any updates by following me on Instagram and X, all the links in the bio. If you like the content, please like the video and subscribe the channel. Until then, stay safe. Happy trading.